Alrighty, good morning everyone. I'd like to welcome you to our Forms of Ownership webinar today. So, I'm Josh from the University of Verne Small Business Development Center. I'm a business associate here. As you guys are coming in Zoom, we'll go through a couple of things first, and then if you're on Facebook Live, give me a thumbs up if you can hear me, and let me know where you're watching this from. So, as people are getting on, we'll give you a little bit of background on the SBDC. The SBDC program here at the University of Verne is grant funded through the SBA, the Small Business Administration, and the Governor's Office of Business and Economic Development here in the state of California. We help businesses start and grow, and we do this in two ways. We offer free workshops and webinars, just like this one, and free one-on-one consulting to help you guys be successful. So if you're interested, we'll have our phone number and a link to sign up to schedule an appointment with a consultant shown throughout the webinar. So before we start, we'll give you a little rundown of how the webinar is going to work. Everybody who comes in will be on mute to eliminate any background noise, but you can submit your questions through the Q&A feature down below on Zoom or through the comment section if you're on Facebook Live. So don't be shy, we want you to get your questions answered. The slides will also be made available after the webinar, and the recording will be as well. So if you have to drop off for any reason, we'll still have you covered with that. But with all of that out of the way, I'm pleased to introduce our guest speaker for today. He's from the Franchise Tax Board. Lucius is the Small Business Liaison for Taxpayer Rights Advocates Office. He assists with development of small business education, just like this, and outreach programs in order to help business owners in California better understand their responsibilities and requirements for income tax. He's also an incredible resource because he knows both sides and can empathize with the concerns of small business owners when they start out. So without further ado, I welcome Lucius Davis.
Thank you very much, Josh. That was an awesome introduction. I mean, I don't know why I deserve such a great introduction like that. That was like well written and everything. Let's see here. Let's get my screen, share my screen for you guys. And we got that. Okay, can you guys see that? Yes, we're good. All right. Well, yes, my name is Lucius Davis, and I am the Small Business Liaison at the Franchise Tax Board. Now, notice that I said my name rather slowly, Lucius. Now, the reason I do that is because my name is a little different and sometimes a little hard to pronounce. And I've done many, many interviews and many presentations over my career, and I have found that if I don't make sure that you know how to pronounce my name, there's some very interesting variations and differences with them. For example, I've been called everything from licorice and loose shoes and luscious. Well, actually, that last one, I don't quite mind that last one, depending on who's saying it. Ha! So, like I said, I am from the Franchise Tax Board, and I can tell you guys are just so excited to see me, right? I can feel it through the computer screen. Well, if not, that's understandable. Usually when I mention I'm from the Franchise Tax Board, the air gets sucked out of the room, people start shutting down the computers and heading for the exits. But I am here to tell you that we are not all the bearer of bad news. How many of you out there know that there's a Taxpayer Rights Advocates Office at the Franchise Tax Board? Anybody out there? Well, I am here to tell you that there is, and specifically, I'm from the Education and Outreach team, and here to help you understand what it means to be in business in the state of California. Brief background before we get started. Before I started working at the Franchise Tax Board, I was an overseas basketball player for about 13 years. I played in many, many different countries. I was exposed to many different cultures, customs, mindsets, ways of doing things. After I retired from professional basketball, I became a small business owner for 10 years. So I truly feel with the uniqueness of my background and the uniqueness of my experiences that I definitely can relate to what you're going through or what you're about to go through. And I truly mean that. from the start all the way to the finish. From the excitement and anticipation that you feel when you come up with a dream or a vision and you start to pencil it out and you come up with a business plan, to educating yourself and researching on what it means to be in business, to the joy you feel when you actually see your dream or your vision become reality, and the pride that you feel when you actually see it be successful and earn a profit. From the highs to the sometimes lows. How things just seem so darn confusing and oftentimes overwhelming. How there just doesn't seem to be enough time in the day to do things in the right way. And this is the big one, at least it was for me. How it seems like everything that comes into the business account goes right back out. And then some. Been there, done that, bought a bag of popcorn and saw the movie. I know how you feel. And you know what? I commend you. I commend you for taking the time out of your busy schedule to attend an event like this, for educating yourself, wanting to do things in the right way, but most importantly, for pursuing your dreams. I know firsthand that it is not easy. So today we're going to be talking about forms of ownership. One of the most important decisions that you have to make as a small business owner is what form of business ownership will best fit your business needs. Or if you're a current business owner, if your current form of ownership still fits your business needs. We're going to be talking about some of the more common forms of ownership, such as sole proprietorships, partnerships, corporations, and limited liability companies. We have our handy dandy little booklet here, publication 1123. You guys can see that. If we were having this presentation in person, I will be handing these publications out. We like to call this our little black book. And as you can tell, I'm very proud of it. This goes over some of the more common forms of ownership, but also some of the less common forms of ownership as well. You can always get this publication on our website. If you go to ftb.ca.gov, in the upper right-hand corner, there's a search button. You type in forms of ownership or publication 1123, a link will pop up and you'll be able to access the form then. And I highly, highly recommend that you go download the form because it's a handy dandy reference and it's basically what this presentation is based off of. And I know it's already been discussed, but we'll save your questions, save your questions till after the end of the presentation. That'll allow the flow of the presentation to go better. And a lot of times answers in the beginning of the presentation, questions in the beginning of the presentation will be answered as the presentation goes ahead. All right, so there's a couple of things that the education outreach team want to have a little bit of an emphasis on. So we're going to talk about those things really briefly before we get into the forms of ownership presentation. And one of those is the California Earned Income Tax Credit. I know most of you out there are familiar with the federal EITC or Earned Income Tax Credit. Well, there's a California Earned Income Tax Credit as well. There's some real money out there that might be available to you if you qualify. We have a lot of information on our website at ftb.ca.gov, and the Cal EITC has a dedicated website as well at caleitc.org, where it has a bunch of calculators to see if you qualify. It might not be something that you qualify for, but if you have employees, they may qualify. And it's good just to check out because recent legislation has now allowed for self-employment income to be used to qualify for the California EITC. In order to qualify for them, you have to have wages and adjusted gross income within certain limits. You and your family have to have valid Social Security numbers. You cannot use the married filing separately filing status, and you have to have lived in California for more than half of the year. If you meet all these qualifications, please go to their website to check to see if you qualify for the Cal EITC, because there's some money out there that might be there for you. Also part of the education outreach team, we know that the more knowledgeable you are, the more compliant you will be. Knowledge is half the battle. And the great way to do that is to visit our fantastic and informative website. Any questions that you may have, we always recommend that you start here because a lot of questions can be answered because it's an exhaustive resource of information on filing requirements, not only for your personal income taxes, but for your business income taxes as well. We have a lot of wonderful online services that are available on our website, such as WebPay, where you can pay your bill electronically directly from your bank account. But our best online resource, and I highly recommend that everyone sign up for this, is a MyFTB account. This is a fantastic resource that gives you real-time online access to your account, where you can do things like see which tax years have been filed and which ones we've received, any payments that you've paid, see if we received those, if you have a balance due. You can even correspond to any notices that we may have sent you in the mail. You can answer those through your MyFTB account. And the best thing about the MyFTB account is a tool called Secure Chat. And it's a great tool because it allows you to actually chat with someone about your account, have some access to your account. And the best thing about that is it allows you to avoid having to call in and wait on hold for 3 hours before you get to actually talk to someone about your account. Please sign up for MyFTB. There's a little bit of a process to sign up for it because it is we have security concerns. Once you sign up online, we will send you a PIN number in the mail. Once you get that PIN number, you'll be good to go. Usually it takes about 7 to 10 business days, but once you get it, you'll be good to go. Please sign up for a MyFTB account for real-time online access to your tax account with the Franchise Tax Board. Lastly, we have Tax News. Tax News is a monthly online subscription service that is owned by our shop at the Taxpayer Rights Advocates Office. It's a collection of articles that come out every month. And it's a great way to stay informed, almost over-informed on all things taxes and the state of California. We'll have articles on friendly reminders when tax returns are due or estimated tax payments are due, any changes to our policies and procedures, any new state tax laws that might affect you or your business. This is, we narrowed this down to focus it on tax professionals, individuals, and small business owners. It's very easy to sign up. You can go to our website at ftb.ca.gov, navigate to the newsroom section. There's a subscription service link. You pop in your email and Tax News will come to your email inbox totally free once a month. So please sign up for Tax News as well. All right, enough of that stuff. Now we will get to our first form of ownership, and that is sole proprietorships. Now, if you want to be in business today and you want to be a sole proprietor, then guess what? You would be in business. You would just need to make sure that you have the necessary permits and the necessary licenses for your particular business and your particular location. For example, if I wanted to open up Loose Shoes shoe tightening service and I have the necessary permits, the necessary licenses such as a seller's permit, business license, building permits, health permits, etc., then I would be good to go. Some great resources on finding out what permits and licenses that you may need for your particular business and your particular location is the Governor's Office of Business and Economic Development. They have a fantastic website called Cal Gold that can point you in the right direction of what permits and licenses that you may need for your particular business and your particular location, or your local Small Business Development Center. And you guys have a great one. And it's been so great to work with the Laverne's Small Business Development Center. We've had a long-standing relationship, and it's been great to work with you guys. And you guys have a great one, and they have some great resources as well. And the great thing about these resources is that they are usually free. So please, please, please take advantage of those. Now, sole proprietorships are the simplest and least expensive form of business ownership. Why? Because there's no requirement to file any paperwork with the California Secretary of State. Because a separate entity is now being formed with this form of ownership, there's no formal transfer of assets in order to start the business. However, it is highly recommended that the assets of the business is kept separate going forward in order to make it easier to keep accurate records. Having a separate bank account is highly advisable so that you can keep track of exactly what's coming in and what's going out. You want to keep as accurate records as possible, as much documentation as possible, just in case questions arise or unfortunately, you get audited. Now, a very important point about sole proprietorships. Because a separate entity is not being formed with this form of ownership, you as the sole proprietor are personally liable for all debts, liabilities, and actions of the business. So for example, if Loose Shoes shoe tightening service got sued because we made someone's shoes much too loose, ha ha ha. Okay, you know what? That was really, really bad, but there's going to be a lot of corny jokes coming your way. So you might as well just strap your seatbelts on and get ready for them because they're going to be coming. So if we got sued, they not only would be able to go after my business assets, but my personal assets would be attachable as well. My home, my car, any investments, any tangible personal property would be attachable as well. And again, because a separate entity is now being formed with this form of ownership, you and your business are basically deemed the same for income tax purposes. The taxable year of the business is the same as the taxable year of the owner. Most individuals are on a calendar year for your taxes, so your taxes will be due in a normal year, April the 15th. Because of the COVID-19 pandemic, this year taxes have been delayed until May 17th. All right, so a sole proprietor is a business owner who lists all of their income and their expenses on a federal Schedule C. And that information will be used on your individual tax return, or for California, that is your Form 540. So all of the income for the business is being reported and all of the expenses for the business is being reported as well. Expenses such as office supplies, inventory purchases, marketing and advertising, lease expenses, employee salaries, etc., those will all be reported as well. So for Loose Shoes shoe tightening service, I will list all of my income and my expenses on a federal Schedule C. After filling out that federal Schedule C and a profit is realized, which is what we want, then that profit will be added to any other income on my individual tax return, excuse me, and that will be used to calculate my tax liability. Similarly, if I had a loss after filling out that federal Schedule C, then that loss could offset or be subtracted from any other income on my individual tax return, and then that will be used to calculate my tax liability. Now, another very important point about sole proprietorships, a sole proprietor is not an employee, is not an employee. Therefore, a sole proprietor must pay self-employment taxes on self-employment income that is derived from the business. So if Lucius owns Loose Shoes, that was a bit of a tongue twister right there. If Lucius owns Loose Shoes, then he cannot be an employee as well. Lucius must pay self-employment taxes on self-employment derived income because there's no automatic withholding. I know most of you are familiar when you work for someone, when you're an employee and you get your paycheck, there's some automatic deductions that are taken out of it, right? Right? Yes? Wake up out there. Yes. Okay, so you have your federal and state income tax withholding, but you also have your Social Security and your Medicare taxes. Those are automatically taken out of your paycheck when you work for someone. Well, as a sole proprietor or small business owner, when money comes into your account, it just comes into your account. So you must pay self-employment taxes on self-employment derived income in order to pay into the system. So if an sole proprietor cannot be an employee and Lucius withdraws money from his business account in order to pay himself, it will not be deemed a salary. It's just a withdrawal or a draw on that account. Now, lastly, sole proprietorships may have to pay estimated tax payments as well. As you all know, taxes in California are pay as you go. Since you don't prepay your taxes, like we talked about with the automatic withholding, you may be required to make quarterly estimated tax payments towards your taxes. In order to do this, a sole proprietorship will include all sources of income when determining estimated tax payments. Installments are due and payable April 15th, June 15th, September 15th, and January 15th of the following taxable year. Individuals will complete Form 540ES in order to report their estimated taxes. Now, generally, estimated tax payments are required if you expect to owe $500 or more on the current tax year. The easiest way to determine this, if you're required to pay estimated taxes, is to look at the total tax due line on your current year tax return. If that's $500 or more, or you expect it to be more than $500 in the following tax year, then you are required to pay estimated tax payments. All right, so the next form of ownership that we will briefly discuss is partnerships or general partnerships. Okay, so a partnership consists of two or more persons operating a business for profit. It can have an unlimited amount of partners, but it has to have at least two to be considered a partnership. So for example, if Bubba and Lucius wanted to get together to form a partnership, a business that sold and manufactured chewing gum, and they called themselves Bubba Lucius. Did you guys get that? Okay, I'm sorry. I know that was corny, but you know what? I was called that back in the day as well. So I figured I might as well make good use of it and put it in the presentation. So if Bubba and Lucius, they want to get together, they want to form Bubba Lucius, and they have the necessary permits, necessary licenses for their particular business and their particular location, then they will be good to go. Now, a question that often arises with partnerships is, well, hey, what about a husband and wife? Well, they have a choice. They can choose to be a sole proprietor or an owner of a business together, or they could choose to form a partnership. They would just have to figure out what the best fit is for their business, but much more importantly, for their relationship needs. So a partnership is a very, very, very flexible form of business ownership. And just like with a sole proprietorship, it is relatively easy to set up because there's no requirement to file any paperwork with the California Secretary of State. The partners themselves decide the organization structure and the distribution of profit or losses. It is highly recommended that this is done with a written agreement or an operating agreement that details exactly how much each partner has invested into the business, how much each partner owns of the business, and how the profit or losses will be distributed. For example, Bubba and Lucius, they get together and they're like, you know what, man, we both invested the same amount of money into this business. We're both going to give maximum effort. You know what? Let's just split this thing up 50-50. Okay, that's relatively straightforward. We'll just detail a written agreement that says that. But what if Bubba is like, I'm going to be traveling a lot and I won't be here as much as you. Or I have another business to run and I won't be able to put as much time as you. Or Lucius is just, in general, better looking. Okay, I'm just kidding. I'm just kidding. I was just trying to see if you were listening. I'm just kidding. Okay, so instead of having a partnership of 50-50, we can have a partnership of 60-40. Partnerships are very, very flexible in that way. Okay, so a partnership is considered a pass-through entity, meaning that the partnership's profit passes through to each individual partner, and then each individual partner will take that information and report that on their individual tax return in accordance to the written agreement. So the partnership Bubba Lucius with a written agreement of 60-40, because Lucius is, okay, better looking, guys. That's like one of the most important parts of the presentation. You're supposed to be taking notes on that, right? I'm saying. So that means 60% of the profit will flow through to Lucius. He reported on his individual tax return. 40% of the profit will flow through to Bubba, and he reported on his individual tax return. Now, a general partnership is not a separately taxed entity, and there's no requirement to file any paperwork with the California Secretary of State, and it is not subject to an annual minimum tax. Now, a limited partnership or limited liability partnership, those are separately taxed entities, and there are requirements to file paperwork with the California Secretary of State, and they are subject to the annual minimum tax. If you'd like more information on those, you can always go a little more complicated forms of ownership. You can always go to our website at ftb.ca.gov or consult our handy dandy little black book if you want some more information on that as well. All right, so how does a partnership report its California income? Well, a partnership will file an informational return form 565 in order to report its income. In the process of filling out that form 565, a Schedule K1 will be generated for each individual partner, and then each individual partner will take that information and report that on their individual tax return. So, Bubba Lucius had a fantastic year. Through hard work and dedication, they chewed their way to $100,000 in profit. According to the written agreement of 60/40, because Lucius is,
better looking.
Did somebody say better? Oh, you guys just made my day. You guys are so nice. It is so nice when you get an unsolicited compliment like that. I mean, totally unsolicited. Thank you guys so much. Just made my day. Just made the rest of my day. So that means $60,000 of the profit would flow through to Lucius. He report that on his individual tax return. $40,000 of the profit will flow through to Bubba. He report that on his individual tax return. And lastly, just like with the sole proprietor, each partner is personally liable for all debts, liabilities, and actions of the business. So if you're getting any professional assistance, especially from an insurance specialist, please talk with them about any products like liability insurance that might be able to offer you some extra protection. For example, Bubba was walking through the facility one day and let me back up. How many of you out there have seen Forrest Gump? Anybody out there? Okay, so you guys remember Bubba from Forrest Gump? My name is Bubba. You guys remember him? Okay, so that's my partner, not the sharpest tool in the shed. And you guys remember what his favorite food was? It was shrimp. Okay, so Bubba was walking through the facility one day and he's talking with all of his friends about all the different foods that you can make with shrimp. At the same time, he's eating some shrimp. A piece of shrimp absentmindedly drops out of his hands, bounces around the facility, ends up in the vat, gets mixed up, packaged up, and sent out to the masses. Somebody buys the gum, opens up the gum expecting to taste cherry, and they end up tasting shrimp. And of course, in this litigious society, we get sued. They not only will be able to go after our business assets, our factory, our equipment, our inventory, of course, our business accounts, but our personal assets would be attachable as well. Our homes, our cars, any investments, those will be attachable as well. So please talk to your insurance specialist about liability insurance to get you some extra liability protection. All right, so now we're going to move on to the most commonly used legal entities. For corporations, the most common are S corporations or C corporations. And of course, we have limited liability companies, or the much easier to say, LLCs. California legal entities, they are formed by filing the appropriate documents or forms with the California Secretary of State. For corporations, you have articles of incorporation that have to be filed. There's various forms that need to be filled out depending on what type of corporation that it is, and you are subject to the annual minimum tax. For limited liability companies, you have articles of organization that have to be filed, and that is filed with Form LLC-1, and you are subject to an annual tax and fee. Now, this last sentence at the bottom is very important, and it's so important, I'm going to read it twice. You are taxed annually until formally dissolved or canceled. I'm going to read that again. You are taxed annually until formally, correctly, properly, in the right way dissolved or canceled. Now, the reason I read that twice, or read it once and ad-libbed, is because I'm part of a multi-state agency project team that is dealing with the issue of business entities forming, but not dissolving or canceling in the proper way. And when you don't dissolve or cancel in the proper way, you're going to continue to get hit with that $800 minimum tax. It never fails. If this event was in person, someone will come up to me and say, hey, I got this notice from you guys, and it says that I owe you $2,400 plus penalties and interest. I'm like, oh no, what's going on? They're like, I don't know because I dissolved this corporation 3 years ago. Okay, 3 times 800 is 2,400. Okay, so did you file the appropriate dissolution paperwork with the California Secretary of State? Well, yes, I did. Here's copies. Okay, great. Did you file your final tax return with the Franchise Tax Board and check the box that says final? Or if you sent it in, even write final across the top? What's that? And unfortunately, in the state of California, it is a multi-step, multi-state agency process in order to dissolve or cancel your business entity. And I know it's not the most exciting thing to talk about in an event like this, but I wanted to make sure if you guys have to go down this road, please, please, please do the proper research so that you dissolve or cancel in the proper way. We have a lot of resources on our website at ftb.ca.gov. We have a closing a business entity section that can take you step by step on what you need to do. The California Secretary of State has a lot of information on their website. And the Governor's Office of Business and Economic Development, they have a great website called the California Business Portal that has an entire section dedicated to closing your business entity. So please, please, please do the proper research so you don't get hit with that $800 minimum tax repeatedly. Now, if you find yourself in this situation, there may be some relief for you. There was some recent legislation that was passed called AB 2503 that allows for the voluntary dissolution of your business entity. Now, there are some certain qualifications that have to be made for that. You have to have been registered with the California Secretary of State for more than 12 months. You have to have ceased doing business or never conducted business, and the business entity has to have no assets. If you meet all of those qualifications, you may be able to qualify for voluntary dissolution. You will go to our website. We have a voluntary dissolution section. If you scroll down, there's some forms to fill in, whether you're an LLC or a corporation. You send those forms in and the application process will begin. And if you qualify for it, your total liability plus penalties and interest can be abated. So if you or someone you know are in this situation, do some research on AB 2503 to see if there's some relief for you. Okay, enough of that stuff. Now we're going to move on to our next form of ownership, which is C corporations. All right, so a C corporation is a separate legal entity that is owned by its shareholders. What does that mean? A separate legal entity is a business that is given its own individual legal status so that the entity's actions may be deemed separate from the individual owners or shareholders. Before conducting business, and this is true of all other business entities, you must register with the California Secretary of State. It can be costly to maintain and set up. There are certain rules and regulations that a corporation must abide by, like drafting the articles of incorporation that we talked about, drafting bylaws, which is basically a roadmap to how the business is going to be run, keeping minutes at mandated meetings, such as board member meetings or shareholder meetings. This could be time consuming, a bit cumbersome, and a bit costly, especially if you're using an attorney to help you in this area. Now, with a C corporation, you have the option of using an income year or a fiscal year instead of a calendar year. This may or may not be advantageous to you depending on what type of business that you have. For example, if you have a seasonal business such as Halloween costumes or Christmas trees, it may be advantageous to use an income year or a fiscal year instead of a calendar year. If you're getting any professional assistance, especially from an enrolled agent or a CPA, please ask for help in this area. Now, one of the advantages of this business types is that there's generally some limit to your liability. Generally, creditors may only go after the assets of the business for payment. So you guys remember the Bubba Lucius shrimp in the gum fiasco? Well, if we had actually formed a corporation instead of a general partnership, then our liability would have been limited to just the assets of the business and not our personal assets. All right, so how does a C corporation file and pay its California taxes? Well, a C corporation will file its taxes using Form 100. One of the disadvantages of this business types is that it's basically taxed on two levels. It is taxed at the entity level at 8.84% on the net income, and then when the dividends are distributed to each individual shareholder on their individual tax return. However, shareholders may not deduct any losses for the corporation on their individual tax return. Now, we briefly talked about this before, but corporations are subject to the $800 minimum tax. And this means whether your business is profitable or not, the minimum tax you're going to pay is $800. Now, this is due the 15th day of the fourth month of the corporation's taxable year, and it is due whether you are active, inactive, operating at a loss, hiding behind a tree, chewing bubblicious. Basically, if you exist, the minimum tax you're going to pay is $800. Now, the only caveat to that, and I guess this is the state of California's way of trying to be business friendly, har, har, har. The only caveat to that is for newly formed corporations, the minimum tax is waived for the first taxable year. But it's just the minimum that is waived, not the fact that you have to file and pay taxes. I know some of you are familiar when you first start out a business, there's a lot of investment into the business, a lot of expenses for the business. After that first year, you fill out that tax form and it says that you have zero tax liability. Well, for that first year, you have zero tax liability. But in that second year, if things are still not going the way that you want them to, and you fill out that tax form and it shows that you have zero tax liability, from that second year on, the minimum tax you're going to pay is $800. Okay. All right. So C corporations are, they may have to pay estimated tax payments as well. As we said before, taxes in California are pay as you go. The estimated tax is payable in 4 installments, and they are due on April 15th, June 15th, September 15th, and December 15th. Corporations will complete Form 100ES in order to report their estimated taxes. And the amount of each installment is 30%, 40%, 0%, and 30%. Now that seems kind of weird, right? Why wouldn't they just have 25% for each quarterly estimated tax payment, right? Well, that's because they would rather get 70% of your money up front before the fiscal year is over instead of 50%. You gotta love business-friendly California, boy, I tell you. All right, so the next form of ownership that we will be talking about is S corporations. All right, so S corporations are very, very similar to C corporations. There's a few variations and limitations to them. Like a C corporation, it is a separate legal entity owned by its shareholders. Also, like a C corporation and all other business entities, you must register with the California Secretary of State before conducting business. And in order to be an S corporation, you have to elect to be an S corporation by filing the appropriate form with the IRS, that is Form 2553. Some of the differences between an S corporation and a C corporation, unlike a C corporation where you can have an unlimited amount of shareholders, with an S corporation, you have a limit of up to 100 shareholders. There's only allowed one class of stock with a S corporation versus a C corporation where you can have various classes of stock. And shareholders for an S corporation can only be individuals, estates, and certain trusts versus a C corporation where you can actually have another corporation or an LLC be a shareholder. Now, with an S corporation, similar to a sole proprietorship and similar to a partnership, profit or losses passes through to each individual shareholder, whether the dividends are distributed or not. Now, for the entity itself, an S corporation does not pay federal income taxes. But of course, state of California, they want their piece of the action. So An S corporation will be taxed annually at a rate of 1.5% on the net income, and you will file your taxes using Form 100S. So if Bubba Lucius Chewing Gum had elected to be an S corporation and we made $100,000 in profit, we will be taxed annually at a rate of 1.5% or $1,500. And then the rest of it will be distributed to both Bubba and I, and we will report that on our individual tax return. And of course, an S corporation is also subject to the $800 minimum tax. S corporations are subject to the estimated tax payments as well. They go through the same formalities as a C corporation. They pay their estimated taxes exactly like a C corporation would pay theirs. So they will use the same Form 100ES to report your estimated taxes. All right, so now we're going to move on to our last form of ownership that we will briefly be discussing this morning, which is limited liability companies. Okay, so an LLC is an entity formed under state law by filing articles of organization. It is a separate legal entity that is owned by its members, and because of that, and it's noted in its name, there is some limit to the liability of the members. Generally, creditors may only go after what each member has invested into the business. Similar to a corporation and all other business entities, you must register with the California Secretary of State before conducting business. It is considered a hybrid business entity because it takes characteristics from different forms of ownership, and we'll get into that in the next slide. And restrictions may apply to professional services that require a license, certification, or registration. Now, this is where we'll get into the nuts and bolts of what an LLC actually is. So an LLC is treated as a partnership if it has two or more members. And in this case, it would generally follow the partnership rules in the way that it conducts business. So Bubba Lucius LLC, with both Bubba and I as members, we would generally follow the partnership rules. You guys remember that, right? So instead of filing a Form 565, we would file a Form 568 for the LLC. In the process of filling out that Form 568, a Schedule K-1 will be generated for both Bubba and I, and then we would take that information and report that on our individual tax return. Now, an LLC that only has one member or a married couple as a member would be considered disregarded for federal income tax purposes. So if Bubba was actually a Bubette and we were married, we would be considered a single member LLC or SMLLC. And then we would generally follow the sole proprietorship rules. You guys remember that, right? So we would fill out a Form 568 for the LLC, but that would just be an informational return. We wouldn't have to deal with any Schedule K-1s or anything like that. And then, just like a normal sole proprietor, we would list all of our income and our expenses on a federal Schedule C. If a profit or loss was realized, then we would add or subtract that from any other income on our individual tax return, and then that will be used to calculate our tax liability. Lastly, a little more complicated, LLCs can elect to be treated as a corporation. In order to do that, they have to fill out the appropriate form with the IRS, that is Form 8832, and then they would generally follow corporation rules in the way that they conduct business. All right, so let's get a quick recap of that. So, single member or partnership classified LLCs will file their taxes using Form 568. They are also subject to an $800 annual tax, and they may be subject to an annual fee depending on the total income. So it's basically taxed on two levels. It's taxed at the entity level with the annual tax and fee, and then when the profit or losses passes through to each individual member on their individual tax return. Now, an important note about the $800 annual tax. There was some recent legislation that was passed called AB 85 that now allows for the annual tax being waived for the first taxable year. Now, in order to get this, though, you have to have formed your LLC within a certain time frame. So if you formed your LLC after January 1st of this year, then the annual tax is waived for your first taxable year to match what is done for corporations. Now, like I said, you'd have to be in a certain time frame. So if you formed your LLC after January 1st of this year, then the annual tax, the $800 annual tax, is waived for your first taxable year. Please look into AB 85 to get all the details about that. All right, LLCs classified as a C corporation, they will file their taxes using Form 100. Just like a normal C corporation, they're taxed annually at a rate of 8.84%. Of course, they then have to deal with the $800 minimum tax, and members will receive their share of profit just like a normal C corporation shareholder would. LLCs classified as an S corporation will file their taxes using Form 100S. Just like a normal S corporation, are taxed annually at a rate of 1.5%. Of course, they have that $800 minimum tax they have to deal with, and members will receive their share of profit or losses just like a normal S corporation shareholder would. And lastly, I want to briefly point out, excuse me, I highly recommend downloading the Forms of Ownership publication from our website. There's a handy dandy chart in the back, and it's a great chart to have or even print out because it lists all of the different forms of ownership, what tax form you will use, when the tax forms are due, when estimated tax payments are due. It's a great, handy dandy little chart just to have on hand to remind you what your filing requirements, obligations may be. And all of this stuff is also on our website as well. But sometimes, I'm old school and it's like to have a piece of paper just to whip out to see exactly what needs to be done and when it needs to be done. All right, so that concludes our presentation on forms of ownership. I want to thank you guys so much for your time this morning and listening about me and Bubba. If you would like more information, you can always go to our website at ftb.ca.gov or consult our handy dandy little black book. Or you can also send me an email. And I know everyone out there can pronounce my name by now. That is lucius.davis@ftb.ca.gov. Alternatively, we have a dedicated small business liaison email address, and that is at ftb small business liaison, all one word, at ftb.ca.gov. Again, that is ftb small business liaison, all one word, at ftb.ca.gov. And just keep in mind, if you send the email to this email address, we do not have access to accounts. So it's only for informational purposes. That's the only way we're allowed to help being part of the Taxpayer Rights Advocate's Office. All right, it's enough talking by me. Thank you guys so much. And if you guys have any questions, I'll be happy to try to answer those.
All righty, thank you, Lucius. Thanks, great presentation. Broke things down, not only understanding, but a little bit of entertainment in there. I guess we'll turn over to question and answers. So I guess let's head over to Sean first from Facebook, and let's see if there's anything out there.
Thank you, Josh. I want to give a big shout out to my Facebook viewers today, but they are being very shy. So I don't have any comments, but I do want to give a big shout out to the folks who have shared our event. We've kept a number of people watching and obviously very well entertained. So if you've shared the event to help us get the word out about these great resources, just want to say thank you, but no questions at the moment. If you have questions, please drop them in the chat and we'll bring them up online.
Awesome. Okay, I guess then we'll head over to Zoom. So Sophia, what questions do we have there?
All right, first up, our first question from Leanne is, I'm switching from S Corp to Sole Prop because I switched from brick and mortar to a very small online business. I was paying quarterly taxes, but now only about 10% of my sales are taxable. So do I still need to file a quarterly return?
That depends on if you're going to have to pay estimated taxes. I want to back up though, because you're saying you're going from an S Corp to a sole proprietorship. So that middle of the presentation, when I was talking about the business entities forming but not dissolving in the proper way, that was for you. So please, please, please make sure that you dissolve your S corporation in the proper way, meaning that you file the appropriate dissolution paperwork with the California Secretary of State, and you file your final tax return with the Franchise Tax Board, and check the box that says final. Once you do that, then it'll be totally dissolved, and we won't be sending you notices for $800 every year. And I know from being a small business owner and having a business entity that $800, it could be pretty onerous every year. And even in good times, bad times, writing a check to the state of California just to be in business, it hurts. So I totally understand going to a sole proprietorship. So when you go to a sole proprietorship, you'll have to pay estimated taxes if you think you're going to have more than $500 or more due on your taxes for your taxable year. And that'll be through 540ES. They have like a little worksheet and a booklet to kind of work out if you're going to need to pay estimated taxes, but that should answer most of your questions. And you can get 540ES, you can get that on our website at ftb.ca.gov.
Thank you. Our next question from Ashley is, I'm going to be starting a business that is an online marketplace similar to Amazon or Etsy. Do you know where I would find information on registering as a marketplace facilitator for tax purposes?
Yes, I am. The one thing I do know is that you will want to contact the CDTFA because they deal a lot with online services, especially with sales tax and all of the information that you're going to have to deal with that. Outside of that, the Franchise Tax Board is not going to really be too involved because we're just concerned about the income that's coming in and the taxes that you're paying on that. So depending on your form of ownership, that will dictate how we are expecting you to file your tax return, when we're going to expect tax return payments, and how much your tax rate will be. So at the Franchise Tax, we're kind of only concerned with your form of ownership and what income that you do have coming in. But I do know for an online marketplace, it's been in the news the past couple of years. You want to contact the CDTFA or at least go by their website to see if there's any particular information pertinent to your business type.
All right. And the second part to Ashley's question was also, do you know what type of company this would fall under? I looked at the CA Gold site, but we will not have a physical location and will only be selling online subscriptions and digital products to customers, mainly facilitating sales for vendors.
Yeah, I'm not sure what the formal name of that is. It's an online marketplace, and there's plenty of those that are going around. You'll just want to make sure that you have the necessary permits and the necessary licenses for your business. And your fantastic SBDC here in Laverne can point you in the right direction. There might not be a specific one on the Cal Gold website, but you got a great SBDC to help you out in that direction. Once you get the permits and licenses for your local jurisdiction, county or state, and if you're operating as a sole proprietor, then you'll be good to go. You just need to make sure that you have the proper documentation, you have a separate bank account, you do all the things you need to do to keep accurate records so that you can, file your tax return in a timely fashion, in an accurate fashion, so you don't hear from us, down the line saying, hey, we think you owe more money. So it's great that you attended an event like this so that you can kind of hit the ground running and get as much information as possible before you get going.
All right. And then we have another, Sean, you want to go ahead?
I was going to throw in there, thank you so much, Lucius, because every business is so specific. And I'm going to put in the chat on Facebook and the Zoom how to sign up for free one-on-one consulting, because I know that a lot of the questions that might be on your mind are very specific to your type of business, what you sell, how you sell it, and so forth. So just wanted to say thank you for that, because that's what we're here for. So that's all.
Awesome.
Right. And we do have another question. It sounds like LLC and sole proprietorship is essentially the same aside from liability protection. If you buy liability insurance as a sole proprietor, would there be any additional benefit to an LLC?
Yes, you do get extra entity protection as an LLC. And this is something, with my small business liaison hat, I'm only supposed to give information and not advice. So this is something that you'll probably want to at least initially talk to a CPA and enrolled agent about as far as what is best for your specific business. If you're in a business that is prone to litigation, prone to people just trying to squeeze money out of you, it does make sense to have that extra entity protection. If you're not, you do get some liability protection from having liability insurance, but a lot of times liability insurance will have limits to the total amount, and depending on what the litigation is, things can get really expensive. People can be asking for exorbitant amount of monies. There's like industries out there to kind of hustle small businesses out of their money. So it just depends on what your business is in. And if it's exposed to any kind of possible litigation, it is probably best to look into a separate business entity just to get that extra protection just in case anything goes down.
Okay. Awesome. And then we have another couple questions from Gail. Can the Franchise Tax Board liaison answer specific questions about corporation taxes? And how long does it take to dissolve a corporation with a pandemic going on?
Shoot, good questions. I'll answer the second one first. Usually it takes just a couple of weeks. And now the California Secretary of State, they have streamlined, thank goodness, they've streamlined their services a little bit where you can actually submit forms online instead of, having to mail them in. So that I think has quickened up the process a little bit. But, like you said, with the COVID-19 pandemic, and social distancing and people working from home, it's probably going to be delayed a little bit. But it has gotten much, much easier because you can go to the website and actually submit dissolution or cancellation forms on their website. As far as corporate taxes are concerned, at the Small Business Liaison, he knows, I know the normal rules and regulations that the Franchise Tax Board is looking out for. So a C corporation is taxed annually at 8.84%, and S corp is taxed annually at a rate of 1.5%, and they're both subject to estimated taxes if they expect to owe more than $500 or more. That's kind of the gist of it. And if it's anything more detailed than that, you can always send me an email or send an email into FTB Small Business Liaison at ftb.ca.gov. And if I don't know the answer, then I can reach out easily to someone who might to be able to answer your question specifically.
All right. And then one last question. What is the best corporation to use for a small but growing business? I'm a sole proprietor business at the moment.
Yeah, so that falls into the category of advice, and I can get in trouble by giving advice. But if you have a small, instead of a book selling company,
They didn't say what kind of business.
that is a discussion you will want to have with a CPA and enrolled agent. And I know it's a little bit of an expense, but you might be able to catch a sale or something to get a free consultation, or even go to your small business development center and get a consultation with them to really drill down in what exactly your business is, and if it makes sense to go from a sole proprietor to an LLC, or go from a sole proprietor to an S corp. Because if you do decide to get that separate legal entity, you are going to have to deal with that $800 minimum tax or annual tax after that first taxable year. And like I said, that does hurt every year that you pay it. So that is something that you'll want to talk to someone about, and really drill down about your specific business so that you can come up with a game plan that makes the most sense for you.
All right. And just one last question. Someone asked, I have just started my business as a sole proprietor and pouring my personal income into it to survive. Should I assume I won't owe over $500 in taxes?
Well, that will depend on what your income is. And your income will be, your business income will be added or subtracted to your any other income that you have on your individual tax return. So for example, if you have a small business and you're putting a lot of money into it, a lot of investment into it, that is a business expense. You'll be able to deduct that. If you work another job and you have a salary, then if there's some loss for that sole proprietorship, then you'll be able to deduct that from any other income on your individual tax return. If you have a small profit, then that will be added to any other income. So it depends on what your total income is, the tax rate that you're exposed to, and then you will be able to see whether you owe $500 or more and whether you'll be subject to any estimated tax payments.
Oh, and Lucius, let me just jump in. If any of your losses or anything is due to COVID-19 or anything else like that, we do have consulting available for business owners to get some extra help towards their business to get them out of any type of rut. So if you want, you can sign up on our website or give us a call, and we'll set up an appointment to get a consultant to help you with that situation.
And that is awesome. And I wish there was services around that I knew about when I was starting my small business, because getting all this information, having all these knowledgeable people to help, I mean, you're hitting the ground running. And a lot of businesses don't take advantage of all the resources that are available out there. And they try to, like I did, learn everything on their own. And you get some bumps in the road when you're trying to do everything on your own. So having resources like the SBDC is awesome, to be able to talk to someone one-on-one, to figure out, a game plan and to stay out of trouble. And that's an awesome thing to offer.
All righty. If you guys have any other questions, put them in now. Otherwise, if we don't have anything else, I would just like to take a moment to say thank you for Lucius for doing this webinar for us. It's been a real treat for us. And if you would like to set up an appointment to meet with a consultant to consult with your business one-on-one, don't hesitate to sign up on our website at www.lavernesbdc.org/new client. You can sign up as a new client if you're not already one, or you can give us a call at 909-448-1567 to schedule an appointment to meet with a consultant. But if that's it, everyone, thank you for joining us today. We'll see you in our next webinar, Commercial Real Estate Loans, next month. But that's it. Have a nice day.